Okay, welcome. It's gonna be the quick review. Okay, so far this week is going so good. Um, the only issue I have is Tuesdays, right? Tuesdays trading in class is a huge and disgusting issue, right? Um, because it's so hard trading. I mean, this day I traded it in class, but I was looking at the entry, but then I was looking at my teacher because he said something interesting. This is down to 2 and 2.5. Yeah, 2.5 with the 4 standard deviation, so you would have held it right there. But anyways, the model is basically simple, right? Every single thing repeats. There's always a market structure shift. There's always order flow. There's always standard deviation. Standard deviation is basically every single where. On the 1 hour, on the 4 hour, on the freaking whatever time frame. Standard deviation is everywhere, but it's where those standard deviations go to. The importance of those standard deviations is what really matters because you don't want to destroy yourself by putting a lot of standard deviations everywhere, right? So what I have organized or proposed about certain things, right? I also use like supports, for example. I also use this. I think this comes with experience because this is basically like an SOB model. I used to call it like an SOB model. Old low taking out, previous week just bounce, and then just go down. So this is like support and resistance. So anyway, for this week, what happened? Let's go to the weekly time frame because we are smart money and all of these bank people, right? They trade on the hourly, I mean, on the monthly and the what? The monthly and the freaking monthly and weekly. So if you look over here, right? June lows wasn't taken during that week. Why wasn't June's lows taken? Because during September, because June's lows were protected. How were June's lows protected? On the daily, we have a huge fair value gap. Remember, protected lows form in fair value gaps. We have a huge fair value gap. You remember this huge fair value gap? Well, probably we took out June's lows during NQ, so that was a good confluence. If we go to the 4 hour, let's try to go to the 4 hour. Let's try to go to the 4 hour, right? So if we go to the 4 hour, right? I cannot see it well, but like anyways, on the daily, let's try it on the daily, right? On the daily, we have well, like I described on my on my previous video. On the daily, we have a huge we have a huge um bullish order flow coming from this delivery, right? The delivery for June was bullish, right? So since we kept on going higher and higher and higher and higher, just means that this delivery was bullish, right? So anyways, we kept on rallying during June, and then we created this delivery right here. We created a figure swing. This was doing arts, right? This was arts. Um, it was basically arts. We created this figure swing. People would have think that it's gone short, but meanwhile it's long because of DXY. That's why DXY should be the blood of every single thing. And like I said in my previous model video, in every delivery comes what? A failure swing, right? Every new delivery has a failure swing. So a delivery, failure swing, delivery, failure swing, delivery, failure swing, delivery, failure swing. And lastly, delivery failure swing. Right? I think I should give me 1 sec. Let me actually post it on Twitter because since there's a failure swing, and if you look, thank you, bro. Twitter. I deleted Twitter on my phone, but I just use it on my laptop. I use it on my laptop to just go through Dexter's stuff, and then I use it for like less. What the hell? I use Twitter for less than a month. I mean, less than 5 minutes. I just like go to Dexter and then see stuff, and then I just start doing it. So, anyways, let me just post something. MNQ has a new delivery. Buyer, sellers. Sellers. Which one did they really go big or go out? Go out winning. Let's put go out big or go out winning. Go out winning or go out big. Okay. Hold up. Yeah. Anyways, I forgot to put day. Anyways, we have a new delivery. We have a CSD close above is high. CSD. I love that. So that's why Tuesday went lower. But anyways, Tuesday, I wasn't expecting Tuesday to go lower down here because like what the hell, bro? Like Tuesday, what the actual hell? But anyways, Tuesday it made sense that Tuesday should go lower to OTE, and then here we should expand. Right? Why? Because like I said, and we'll say every single time, every delivery has what? A failure swing. Every delivery is what? A failure swing. So every delivery has what? A failure swing. So we're in a new delivery right now. So anything that should happen should be well, it makes sense because I'm actually pissed that I didn't catch this failure swing earlier because I would have caught it. But it is what it is. But anyways, failure swings upon failure swings for a new delivery. Then we took out these lows right here. For previous day, we took out this low. Now, why is this low protected? You might ask. Why? Or bro, like, why is this low protected? Like, Paul, why? Like, Porridge, why did you long? Why is this low protected? Because one, we have a monthly what? A daily what? CSD. Remember, anytime we want to look for anything like a CSD, we go to the daily. Then for market structure shifts, we go for the hourly and 4 hour. Right here we have what? Failure swing. Tuesday should go down. So I'm actually pissed I didn't get this short. I was in class, so I didn't pay attention. So I wasn't on my chart, I was on my phone, so I didn't see this on the I didn't even know that we closed above here on the daily, so that was my fault for me taking a loss. So anyways, for price going higher, I knew dang it, bro. My phone is about to die. But give me a sec. The reason why I'm just talking about I'm talking now, even though I have assignments right now. I have like tons of assignments, but the reason why I'm trying to put out this video right now is so that I won't forget. I'll come back to this video. So, anyways, what do you see about this fair value gap? I want you to understand something, right? Also, also like learned this today. I want you to understand something, right? What do you notice about all of where these failure swings come in place? Where do they all form? Boom. Look, I want you to understand something. Where do you think all these failure swings form? Where do you think they all form? Think. Where do you think they all form? Another block. There's a volume imbalance. Where do you think they all form? I'll take this volume imbalance because that's good. You could take this fair value gap. Where do you think they all form? Come on. Tell me. It's right in front of your face. It's like you don't need order blocks or all that, bro. It's right in front of your face. It is right in front of your face. This is okay. I'm recording. This is what I do. Like this is all I need. I like I don't need literally. I really don't need order blocks. All I look for is fair value gaps or volume imbalances because that's all I need. Probably order blocks on the monthly or weekly, but this is all I need. What did so today also something I want to tell you about fair value gaps. So my friend, so basically, I have a friend who I can't disclose, but anyways, I'll just say, but his name probably no one will know him on unless like somebody who is in our friend group. His name is Chaotic. So Chaotic has a cap, and then he has other friends who let's put this. This is Chaotic. Let's call him Chaotic. So Chaotic has other friends who I'll call the freaking the freaking market makers, right? Um the freaking market makers, right? No market makers, but bro, why is my drawing so good? I don't know why I just want it to be perfect, but anyways, the freaking market makers, right? So anyways, Chaotic has a friend and he's friends with not market makers but people who understand Delta, right? Delta, order flow, and algo traders, right? I, I think that's the best way to describe them, right? So Chaotic, right? Chaotic told me, Chaotic basically told me, so these guys, right? They told Chaotic about what really goes in the marketplace, which is ICT. So anytime ICT says that there's an algo, ICT is not capping, and it's crazy that ICT is actually 80% or 90% correct in the things he's talking about when he says there are algos. So these guys have over 100 or 1,000 algos inside the market that works every single time. For example, when a for example, there's an algo every single year or every single quarter, right? Just like how there's an algo for this quarter, there was an algo for this quarter, there was an algo during April. What was April doing, bro? Bro, April was crazy. That's an algo. That's the algo for that month. So all of these big billionaires, they all have an algo. So this guy told Chaotic about what did he tell Chaotic? He told Chaotic about footprints. Now, what exactly is footprints, right? Footprints, which are order blocks, and fair value gaps, right? So what did this guy tell Chaotic? Since Chaotic is a, by the way, Chaotic, like, if you're watching this, bro, you are a goat, like, bro. Okay, I don't want to be decrying, but like, I'll like decry it in chats. But anyway, in the group, I'll like decry, but like not right now. Anyway, um, what did they um, what did they tell Chaotic? They told Chaotic that order blocks are where orders are, right? Because order blocks, because everybody knows that, right? But I want you guys to think of it as this, right? Order blocks are where people are. Like, think about this in the terms of buying and selling, right? Order blocks are where buys, where a lot of orders are for billionaires and other people. Now, this guy doesn't know, has never heard about ICT, as Kyoto said. He has never heard about ICT, doesn't know about ICT, but he also said fair value gaps. Because Chaotic told this guy about order blocks and fair value gaps. So he was like, yeah, he was confirming it that fair value gaps are used as levels to reprice and rebalance orders. Now, right? Of course, this is ICT, but I want you to think about this, right? Forget about ICT, but listen to, of course, you should use ICT, but listen to this. Order blocks are for orders and billionaires. There are orders on every single up close candle or down close candle. If there's a candle that confirms the order block, those are orders right there and then. But if you go to the fair value gaps are used for repricing. What do I mean by repricing? Every fair value gap, every single fair value gap has a new delivery. That's what he's trying to say. That's what he's trying to say. Every single fair value gap has a delivery. This fair value gap had a delivery, failure swing. What happens during a fair value gap? We come down, failure swing, go higher. Fair value gap, high, failure swing, go down. Fair value gap, high, come down, failure swing, go up. Now, where will I be targeting? To be honest, I'm gonna be targeting here if I want to go ballsy, because if you take a failure swing, right? It does. If you take a failure swing, right? If price only takes a failure swing, it just means that we're just going up to go lower and making a new failure swing. But if we take the real delivery, bro, that just means that means this delivery is done. What happens here? We go up, we took out this high CSD, and then we come down, we took out this delivery. So after taking out this delivery, we repriced. Now I want you to think of it as this, right? Look down here, look down here, look down here, look down here, look down here. Right? Look down here. We have what? A fair value gap. This is the repricing. Chaotic also said, also put this in your notes if you have a note and you're probably you're not taking notes, but anyways, just like listen to this. Chaotic also said that these levels or these fair value gaps are used so that nobody will come down there. What do I mean? Look here, right? This right here is a level. This low right here is a strike price for options, right? So anytime people are shorting, the billionaires, if you notice about all of these failure swings, what do you notice? They are always big, bro. Like, oh my days, they are so big and fat and juicy. Like, look at this. Look at this pump. If you notice about all of this failure swing, pump, pump. That is to trick people that we are selling. But what are they trying to do? They're trying to make failure swings. Because why? This is a strike price they don't want people to take out. They're using all those people for liquidity. Weekly fair value gap. Remember, institutions look for weekly and monthly and daily, but mostly weekly and monthly. Look at this. Repricing. We came lower, but guess what? If we took out this liquidity, they already took it out in spools, in ES. I had a friend that told me that they took it out in ES. I don't look at ES, I really look at one chart, but look at this, bro. Isn't this perfect how this algo is so beautiful? Like, isn't this so beautiful? Like, oh my god, like, bro. Like, if you can see it, you can't unsee it. You can't unsee it. Failure swing upon failure swing upon failure swing upon failure swing upon failure swing. You will be expecting now. You might ask, how exactly do we know that there will be a failure swing, or if there won't be a failure swing? Okay, I could answer that, because how will we know that the failure swing could happen? Let me give you an explanation. Failure swing after this is a TCM logic, right? After we take out a daily range, because this is a daily range high and a daily range, this is a daily range low and this is a daily range high. After price close below a low, right, the next candle will be EO, right? The next candle is engineered origin. So price went up, 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 and then what are we meant to take? We're meant to take, so if you also use art logic, right? We closed below that low, so that means we need to also go up. So any low or any high that was before this candle should be taken. So what happened here? Any low and high that was taken, this candle right here, we're going to take here and here. Then we'll go for what? The 50% or whatever it is. Look at that. Is it like that is perfect? That's how I also like predicted this day right here. I can't find it, but bro, I need to actually start saving my screenshots or something. This was when I also said art is here. We took out this high, right? This low right here. So when I got this, I got 50% right here, and this was when I was going short. I went short. No, I went long here, and then I went short right on Tuesday, right? I went short on Tuesday, went long on Monday, and also went short here. There was a CSD to take out all these highs right here. So we took out this failure swing. Remember what I said? If we take out a failure swing, that just means we're going lower. But if we take out this delivery, that means we're still going lower or higher depending on order flow. So we took out failure swing, but then what happened? We went lower and lower and lower and lower, and then we did what? We took out this delivery. After we took out this delivery, we took out the failure swing. We didn't take out this low, meaning this delivery is still what? Is still bullish. Since we took out this failure swing, what happened right here? We made another failure swing, meaning what? This delivery is still bullish. So that is crazy. Now, about this day, right? About this day, right? Hold on, give me one sec. Well, anyways, I'm gonna have to read too, so let me just wrap this up quickly. So let me see. This is 24. Yeah, I'm gonna have to wrap it. So, anyways, after the failure swing, what do we have here? Remember, after we did this, and then we took the week. What week what week really made the impact here? Boom and boom. That was when on what do you call it? This was on Monday, right? So it makes sense that Tuesday, because Tuesday also had the silver bullets, right? So it made sense that Tuesday had the silver bullet, and for Monday had the silver bullet, then because it was aligned with the two standard deviations. Then Tuesday we dropped lower. I hate how, and also we created the CSD. Sorry about that. We created the CSD to go lower. So CSD first, then failure swing. CSD first, then failure swing. CSD first, failure swing. CSD first, failure swing. CSD first, failure swing. So on and so forth. CSD first, failure swing. So just like that. So on the daily too. So failure swing lower, and then now failure swing higher. So all of these highs are what I'm going to be targeting because they are all low resistance liquidity run to me. So let's go on the 4 hour, right? 4 hour is where things could get a little bit complicated but easy if you know what I'm saying. All of this is consolidation. You think about it, and then blah blah blah. But I don't use those. I only use them for the sessions and all those stuff. But anyways, what do we have right here for this week? Why did I think that we were still bearish? One, we had a fair value gap. Two, we had a market structure shift before the new week. Now, I'm going to give you guys some source. Anytime you see a market structure shift on the 4 hour before the new week, that just means that order flow is this order flow. The new week order flow is this order flow. So on Monday, we made a high, and then we took it out right here on the same day. Yes. Took it out, then on Tuesday we traded lower. So the same thing is happening, the same premise. So failure swing 4 hour to lower prices. So this is it. And then anytime we have a 4 hour and then a 1 hour market structure shift, that just means, bro, like that is so powerful. It just means that that delivery is just, bro, like that delivery is lower. But in this case, we have a 4 hour market structure shift, and we traded higher, right? We traded higher for what? Why did we trade higher? We traded higher to cause a CSD, and after the CSD, we traded lower to form the failure zone. So everything should be a magnet, like bang, 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 bang. Everything should be a magnet. A plan should be like this. If we have a sticker, if we have an emoji, let's see. Okay, give me 1 sec. Okay, sorry about that. But anyways, everything in your mind should be like, okay, I want you to become an algo, right? Not to be predicting everything, but in fact, like, I'm not even gonna lie to you, right? The first thing that should be on your mind should not to ever what do you call it? Never ever never ever never tell people what you're going to expect for the week, right? It's after it happens then you show the screenshots. That's the best thing, right? For example, boom, right? Control C, Control V, boom, Control C, Control V, Control V, Control V, Control V. Look, I want your eyes to be like this. I want you to be like this. Everything is connected. Like if you forge into the Spider-Verse, bro, like that's when things become to make sense, right? Everything is connected. There's a reason for every single thing. There's a reason for everything, bro. Like look at this. This is how your mind should be like. Everything is connected. It's all connected. Nothing is random. It can never be random. This is how we'll be helping you. Everything is connected. That's what should be going into your mind. Coming down to the model, every single thing is connected on the daily. Every single thing is connected. Boom, boom. Every single thing is connected. We have a CSD, failure swing. What is next? Boom. Every single thing is connected, bro. Is there any reason for a short? I don't see that, to be honest with you. NFP could do anything, but personally, I don't see that because holy shite, every single thing is connected. This is FOMC high. We could go over here during NFP. Every single thing is connected because, oh my goodness, like if you know how everything is connected, then you don't need anything else. Standard deviation here up to here, CSD, that's all you need. Now, would you trade this even though there's no market structure shift for Thursday? Hell no. Did you hear what I said? I said hell no. Of course, on the 1 hour. What do we have on the 1 hour? We don't have any market structure shift on the 1 hour. Would you still trade this? Hell freaking no. I won't trade this. Not in a million years will I trade. Probably I'll risk less, even though it was a good R. But bro, why would you trade this if there's no 1 hour market structure shift? Like, of course we know that this low will get taken and that price will go here, but was there any market structure shifts during Wednesday? No, so there will be no trading here. But of course we'll expect bullishness. Now, on Friday, will we skip this day? Probably yes. But even though, let's see. Let's go to 4 hour. I'm gonna start pouring out a lot of sauce because I have a lot of assignments so that I won't forget. So, anyways, we go over here, down here to up here. What do we have right here? 2 and 2.5. Was there a reason to short during here? Absolutely freaking yes. We hit 2 and 2.5. We have a market structure shift. We took out all this liquidity right here. Was there a reason to short? Yes, because we took out liquidity in 2 and 2.5, 10, 9. What do we have? We have a 4 fair value gap right here. So 4 hour fair value gap, we took out liquidity and then what happened? So lower. So for in this scenario, where like be like, I know you'll be like, oh, but Paul, like, but porridge, where the hell will I sell? Like where should I sell? Like, I know like I'm into sell, but like, where will like my take profit be? Because if we're gonna be entering right here and then there's no standard deviations, like, bro, you're you're trying to make me like fail. That's where I don't want you to fail. Because what do we have right here? We have the silver bullet. What do I have inside the silver bullet? We have this relative recall lows, right? This lows right here. Inside where? The silver bullet, right? When you shorts 10 a.m. basically you've caught the high of the day. 50 points, 50 handles down to this low. That is your 5 hour and you're done for the week. You're done for the week because you took how many trades? One. I'm sorry, this is a London trade. 1, 2, yeah, this trade too, 3, and then 4. Because you took 4 trades and you're done for the week. Like isn't that crazy, bro? Like, isn't that crazy? You took 4 trades and you're done for the whole week because you understood market structure and you understood standard deviations. So What happened on Monday? We came down below silver bullets. I expected us to sell up to 2 and 2.5. What do we have right here? Price went lower. What do we have during this time? Do we have a standard deviations during this time? Nope, we didn't have the right standard deviations. What about the next standard deviations? Do we have it? Nope, it doesn't follow our rules, so that means it's wrong. Now this is just overkill, that's too much handles. So what about this standard deviations? Yup. Does it go? Nope, it's wrong. What about this standard deviation? Does it go? Yeah, but if you've gone at 15 minutes, yeah, let's go on the 15 minute and very high from here down to this low 2.5. Let's try to give it a little touch for, let's go on the 5 minutes. Yada yada yada. We don't speculate, there's a reason for every single thing, my brother. 2.5. You could probably put it right here. Let's see. Week to week. Yeah, I'll personally I'll take the bodies, week to bodies. On the 15 minutes, because on the 15 minutes, I'll take the 15 minutes, because that's too much for me, bro. Like, what the hell? Anyways, wick. So this is our CSD right here. Wick to this to body. I like seeing things like this, right? If you see another tip about standard deviations, the manipulation, right? If you're thinking the price should go lower, the high should be the high, the low should be a rejection block. If you see collection of wicks, if you say collection of wicks for the high, take it. Like, you don't need the body and body, you should take the wick. But if you see something like this collection, take the body, bro. Like, that is the best piece of advice for standard deviations on if you should take the bodies of the week. Take it. For example, let's say this week, right? This week I took this, that I didn't take this trade, but I think I took this trade. Yeah, I took that trade. This was an OTE trade, so I expected this to be a long because we have a 1 hour market structure shift, but we didn't have a 4 hour market structure shift here. Another like market structure shift for the 4 hours. So this delivery was up to this high, so I registered that in my mind that this delivery was up to this high. So anyways, we have what do we have right here? Alignments, silver bullets right here. So from here to here, if you look over to the 1 hour, right, that's what I want to show you, right? If you look over to the 1 hour, what do you see? We see from this high to this body, right? And then 2.5, and then that's where we reversed, right? Yeah, 2.5. We targeted 2.5. We targeted that. We hit it. So what does that mean? It means this delivery is done. As soon as we get our market structure shifts, this delivery is done. This delivery is done. 3 to here. So 3 standard deviation is alright. I mean, let's see, 3 standard deviations. Of course, you'd be like, oh, but it's 3 standard deviations. Blah, blah, blah. I'd use 3 standard deviations because I found that sometimes price is just price, you know? You feel me? Like, price is just price. God dang it. But anyways, this failure swing, there's also another failure swing right here that you could take this one because remember for our market structure shifts right here, right? Oh, sorry, right here. So for our market structure shift, and then yada yada yada, then blah blah blah, then this, right? You could take anyone's, but I like taking current order flow because, bro, that is too much. 174? That is way too overkill, bro. That's way too overkill. So remember 50 to what? 50 to 160. We don't need any 50 to 170. It's 50 to 160 for the weekly expansion. We don't need any tweaks, any nothing to it. We just need all price soon. So let me look for another example. Let's see. No. Market structure shifts. What else? Boom. What else? From here to up here. Right? What do we have right here? Silver bullets. What do you have right here? This is during 10. Cursor, silver bullets, right here, bang, 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 down here, down to 4 standard deviations. Failure swing, but let's see how many pips this is. From here to up here is 148. We're gonna take that because it's the current order flow. From here to up here is 128. We're not gonna take that. Market shift on the 4 hour. Failure swing, and then higher prices. Hello, what do we have here? Hello, repricing. Exactly. So nothing is complicated. Everything has a reason for every single thing. Boom. For February gap. Taking liquidity out. This is during 10. So 10 low of the day. For this day. Blah blah blah. Bang bang bang. Here. From here to this low, you might say, but bro, this is 175. We're not gonna take that. In the lower time frame, we made a failure swing here. This failure swing projected to this low right here. So that is it. Retracements, blah blah blah. You could put from here to right here. OTE, my model, and then boom, down to repricing. Repricing, market structure shifts, higher prices, market structure shift on Tuesday, repricing higher and higher and higher. But anyways, it's the same thing for here. From here to here, that's what that's 4 standard deviations. If you use the 1 hour, because the 4 hour is, I don't know why the 4 hour is messed up, but yeah, 4 standard deviations. This market structure shifts, lower prices. If you also take this low right here, market structure shifts. But anyways, this, and then we have what? We have market structure shift on Tuesday, 2 a.m. Boom. After 2 a.m. what happened? If on the 4 hour, you could say that this right here is our failure swing. Yes, I mean, this is our what do you call it? Freaking. Bro, I can't think right now. I'm thinking about my assignment. By the way, yeah, this fair value gap on the daily. This was a huge ass fair value gap. Then blah blah blah. Additional shift. And then blah 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 blah. Okay, the swing. Blah 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 blah. Daily. This is the daily. This was daily. What do you call it? This was the daily close, and then higher. Bang. This was the daily failure swing. So all of these price actions to make that lower. So makes sense, makes sense. But anyways, it went lower, 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 lower. Now you might be like, oh, but why can't we put the stuff right here? Put from here to up here. You can, but let's see how it goes. It's on 2.5. Maybe use the wick. It's on 2.5. For this scenario, we use the wick to wick. 2.5. Now this 2.5, does it align with the arts, with the daily arts? Does it align with the arts? Yes, it does. From here to here. Let's align our levels right here. Let's remove this. Let's go to the hour. Okay. It doesn't, but it aligns with this, so make sure it aligns. So 3, good. It aligns to, and then we go lower. But of course, another thing about getting these arts, right? There's sometimes where price just doesn't there's most of the time, right? Not even most of the time, if we're doing the daily stuff, right? It could hit the 1 and 1.5. That's if this is closer to whatever you get what I'm saying. So hit 2 and 2.5, reversal. But that was why we shorted right here to make the failure swing. Then we went back right here and took out all of these highs. Remember, this was the same thing that happened when. Oh my days. When did this happen? This happened here. This could happen tomorrow too. We just take this low right here. We wouldn't even take here. Like that would be so crazy, bro. It's too like come on, bro. Like come on, market makers. Like that's too close. That's so close. That's so close. Like come on, you can't take. If they didn't take out this low, then tomorrow we'll come and take this low out. Then like, bro, that would be so good. You just use all those liquidity. So, but anyways, this is it. This is the same thing that happened. Look at this delivery. This is the same thing that happened right here. But in this case, what happened in this case? Well, the market should get shift. But meanwhile, I want you to think of it as this, right? Another thing about market structure shift is failure swings, right? So before this week, right, I was already bullish because this was a 4-hour market structure shift to me because it's a failure swing, right? The failure swing was made and then we got a CSD, so I was just bullish this whole week. So since I was bullish this whole week to go to these arts, right, to the 50% of this whole thing, so we have Monday. I traded. I didn't. I closed my trade on Monday because it was too slow for me. I didn't like the slow price action, but I was bullish. But I closed my trade and then price just pumped. So I like how I'm on the right track. But anyways, let's go to the. Here we go from here to the manipulation of here to here. Right. Let's try to use the body right here. Anyways, Tuesday we hit the P there, so that's why I was short over there. But let's go over to the 1 hour. I think it was cleaner in the 1 hour. I don't know that week I was just doing like in my I don't want to say demon timing, but yeah, we're bullish on on the 4 hour, right? But we weren't bullish on the 1 hour because we don't have any market share shift. So I just use this failure swing right here. I use this failure swing right here. This is a failure swing because this is going to take out the clip. So I use this swing right here, and it's at 10 a.m. So that price, that time. So the main market share shifts, then we came higher, higher, blah blah blah. I was just bullish this week, bro. But anyways, for this delivery right here, right? Let's see. If we take here to here, this is what 120. If we take from here to up here, that's what 130. Now, which one would you take? I'll take the bigger one because I wouldn't take the smaller one, even though this is the good figure swing. I'll probably take this one right here, and then two and 2.5. I'll probably take this one right here. But I know you could take this one right here. It's still going to make no difference because the arts, higher time frame, we hit the arts level and then we trade it lower. It still makes no difference. But adjust the body to body, you could still get a touch from this well. But yeah, let's see. 12. Yeah. From here to here was what? That was 40, yeah. That was why I was longing, right? Yeah. From here to so hold up. See. This was for Monday, so this was the daily delivery to 4 standard deviations. The total pip is what? This is 40. So look, this is Asian session. The new day starts here, right? So from 18, and then this is the 4. Hold up, I'm not putting anywhere. Set here to up here. Yeah, 4, and then we start reversing. So that was why I was long. Silver bullet 10 a.m. Fair value gap right here below 1 hour fair value gap below silver bullets. We went here, retrace, and then reverse. We use Fibonacci from here to here. OTE. So that was my trade here, but I didn't take it because I closed out of the trade because too slow for me. But anyways, for this type of scenario, you should always go for the daily expansion. Don't go for the 2 and 2.5. So that is just it. So let's see another example, right? So let's see another example. For this day, what happened? We took out liquidity. Other liquidity taking 1 hour for market shifts from here to where? Down here. So a new delivery because this was the failure swing that was taken. So a new delivery, we didn't take out this low right here. So a new delivery up to where 2 and 2.5. Right here, was there any market shift on the 1 hour? Nope. So before 10 a.m. basically. So another key thing is to enter before 10 a.m. If there's no market shift out before 10 a.m., then you enter. So silver bullets on where this fair value gap right here. Why is this a fair value gap? Because ICT, I can't explain, but like this is a fair value gap because wicks are considered as gaps. It came lower, blah blah blah, yada yada yada, up to 2. So let's see. This day was the day where you just had to rely on the 10 a.m. and the silver bullets. You didn't need any confluence. You could use the standard deviations to project where we will reverse from. Let's see. Let me show you. We use the 5 minutes for this day. Let's see what price gave us. We have what standard deviations from here to here. That was a good one. From here to here, 2 and 2.5. That was all we needed, and then we went higher. We wanted to use the bodies and stuff. Strategy. We wanted to use the bodies and stuff. Of course, you won't get for to the exact, but 2.5 week to week. That's all we needed. Even though it was close, I would prefer week to week because it's closer to the fair value gap. So 1 hour, and then bang, we went higher. That is all I need. I don't need any single thing. That's the model. Stick. But anyway, that is all I need. Like, that's all I need. So I delete this. Also delete this. Also delete this. Delete this. Delete this. Okay, so 4 hour daily. Okay, so that was a very, very long explanation to explain what was going on and explain you that nothing is random. So I'm going to delete this, and now we start seriously, right? On the 4 hour, we have a standard deviation, we have a fair value gap, and then we go lower, causing a failure swing. And then on the 1 hour, we have a market structure shift. Now, the key thing about market structure shift, right? If we have a 4 hour market structure shift and a 1 hour market structure shifts all at the same time, take this delivery because this delivery is the strongest, right? Is what is currently on price. Why didn't I put my fib from here to here, even though it's 2 and 2.5? Because this isn't the delivery. This is the delivery. Why? In the 4 hour, we have a market structure shift, and then on the 1 hour we have a market structure shift. So on the 1 hour, what do we hit perfectly? We hit bang 4, and then we reversed. This day I took a loss because I was in class, like I mentioned previously. But on the 5 minutes, if you go to the 5 minutes and you were going to trade this day and you were like, okay, we have, if you were to trade this day, there was a 1 hour market structure shift already. So if you were to trade this day, you'd be like, on the 5 minutes, we're looking for retracements, right? Because this right here is a fair value gap, is the fair value gap that we see from this delivery, right? So let's use this delivery right here. From here to here, we have 30, right? So from here to down here is a daily expansion. So to get over to the 4 daily expansion, we have what? Fair value gap. So the price kept on going lower, didn't hit 4 standard deviation, we get on going higher and higher. What else did we make? We made another one, which is right here. And what happened to this one? 2 standard deviations. Retracement or reversal, and then price headed lower. So for this model, what did I do? I just went from here to here because I didn't look at higher time frame, and then this was basically OTE, so I shorted this. I wanted to long, but then I got a week on my ass, so that was my bad. That would have been your trade right here, down to 2 or 4. Probably I'll take 4. I'll put my stuff at 4. I wouldn't be chasing the 2, even though I'll be like, yeah, we're chasing this right here because of the failure swings. Because the thing about it, all of this is low resistance, high resistance liquidity run, and low resistance liquidity run. So that is the general premise. And then we have, what do we have right here? We have this delivery done because we hit 4 standard deviations. After we hit 4 standard deviations, we created a 1 hour market structure. What? Shift. Repricing market structure shifts. If to determine which Fib, you make sure a fair value gap is there and it's being repriced. So we have that. After we have that, we create low, high. If you want to put this right here, that's up to you. But me, I'll put it right here. So anyways, this is during the 10 a.m. We came lower, and then we traded higher in this fair value gap in the 1 hour. Another thing that would help is 1 hour fair value gaps are very very strong, very indeed strong with the silver bill. So because TCM TCM macro says it. So I go by TCM macro. What's TCM macro? TCM macro says from 8:15 to from 8:15 to 9:45 is a liquidity hunt macro. During this time, there will be a liquidity hunt. From 8:15 to 9:45, there was a liquidity hunt on both sides, hunt here and hunt up here. After that, from 9:45 down to 10 a.m. is offset. So we have an offset right here for shorts. People went short, and then right here for longs. So that's how it is. That's what I use for retracements, for how I know this will be a retracement, also for lower time frames. So it will be in consolidation, BAM, London. You got this. If you also wanted to trade this on the silver blitz, simple and short, fair value gap, and SOD model. Look at how perfect that is. Beautiful. And then higher prices. This for London, basically. Higher, and then here. Now you might ask, why am I not using this, even though it's 42, even though they have the same number? Why? Because for the daily expansion, you would want to take the bigger number, the bigger figure, the bigger points than these two. These two are small points, so you wouldn't want to take them. So I'm taking this because this is the fibs that creates the change in state of delivery, or what the algo is being respecting. So right here, fair value gap. So the model is always to be entered anytime you're on the silver bullet. Always enter on the, if you're longing, always enter on the discount of the fair value gap. If you're shorting, always enter on the premium. So right here, let me get my executions. So I entered right here, then I entered actually right here on this discount, and then I got stopped out by this long wick. So when I saw that price took out this liquidity, I could have waited, to be honest. I could have waited. So like waiting, because I don't like missing setups. That's just the problem with me. I hate missing setups because with this model you need to be fast with knowing what is going on. So swept liquidity, and we took out the liquidity. After this liquidity was swept, and then I waited till we powerfully open high, low. So I waited till price go here, kept on going up. I entered right here, and then we closed right here, and then we opened, and then we kept on. So when we went down, I was like, nah, man, like I don't care, cause I know my model will work out. So then I saw this boom. I was so happy, and I have the recording too. We went higher and higher and higher and higher. I took partial circles of the 3 standard deviations. Those those heavy resistance right here, so that's why I took partials right there. This 3. So and then I trusted my bias down to 2 and took my negative 2 and 4 aligned together. Boom. As for the PM session, we have an inverse fair value gap on the 50% on the hourly. So we have it on the weekly. We have it on the weekly. We have it on the weekly expansion. So if you look over here, we have this and this, so we take this low right here to this high, and then we get our 4 standard deviations. If you wanted to trade this day, but to be honest, this day you could have just entered on, let's go to the 3. For this day, to be honest, you could have just entered on, for this day, to be honest, you could have just entered off this order block right here, because I don't know, or even this fair value gap, because at the end of the day, this is a week, so you could enter on this fair value gap, because it's still, yeah, but I don't trade PM, I only trade AM. AM is my bread and butter, it's my baby, it's my everything, bro. Like, I don't do PM, I only trade EM, so I don't care about anything that happens in PM in AM. So this was the trade I took today. Beautiful, beautiful execution. Now for what is going on, what do I think would happen? Simple. What I think will happen tomorrow? Simple as hell. 2 a.m. is a silver bullet zone. Also the 4-hour candle, which is a lot of liquidity is right there. So simple of what should happen. We should go higher, failure swing, trap people out, go lower, take out all of this liquidity right here, silver bullet zone, and then we go higher. So I'm expecting this to be swept and go and take out this 12 a.m. This is my footprint of what should be happening tomorrow. Probably we'll take out this high first, then we'll go lower. But that's delivery, so that's taking out the high, go lower, and then so from internal liquidity, so from external liquidity to internal liquidity is low, and then to external liquidity, which is what? 4, get -4. All of these highs look juicy. All of these highs look juicy, so they all look so juicy. So anything can happen. That's what I want to see tomorrow, but right now I'm so happy. Today was actually probably the best day that this model actually worked so much. I'm also going to be, what do you call it? I'm going to be backtesting, because I want to finalize this model. Not backtesting, but writing notes, because I have a lot of a lot of notes. Because you need a lot of magnets. Like, you need to think like a spider, right? During this model, right? You need to think of it in terms of a spider. So if this, then this, if this, then this. So yeah, I'm gonna upload this video and see you guys later.